Kingdom's Wealth and Wisdom, brought to you by Petra Worldwide. Here is Nathan Weaver.
Greetings and welcome to Kingdom's Wealth and Wisdom. I'm Nathan Weaver, founder and executive director of Petra Worldwide. For the real estate investors, business owners, and property managers, there is a constant expense battle being waged against the natural depreciation of physical assets. Roofs leak, air conditions fail, and foundations settle. When these unavoidable expenses hit your ledger, your first instinct is to ask, how fast can I write this off against my income? But the IRS does not look at property maintenance through a single lens. Instead, they have drawn a very distinct line, heavily litigated distinct line, may I add, and it's two different concepts. Is it a repair or is it an improvement? Get it wrong on your tax return, and you could face painful audits that force you to slash thousands out of your budget and pay penalties. Today, we're going to break down the complex mechanics of the BAR test, the tangible property regulations, and how to maximize cash flow today without triggering an IRS red flag. The core distinction between a repair and an improvement dictates when you get to take it on your tax return and get a tax benefit. A repair is classified as any ordinary and necessary expense that keeps your property in its normal, efficient operating condition. It does not add value or prolong the property's life. It merely restores it where it was originally. In accounting, repairs are fully depreciable or deductible in exact tax year that they are spent. An improvement, on the other hand, must be capitalized. This means instead of deducting the full amount today, you must add these costs to the property's basis and write it off slowly over its useful life, which for residential properties, it can be 27.5 years. For commercial properties, it can be 39 years. To draw this line, the IRS uses what tax professionals call the BAR test. BAR stands for betterment, adaptation, and restoration.
Pastors and financial leaders, do you need expert accounting or tax help? Do you have payroll or 1099 questions? Do you need a ministry expert to help you acquire real estate for your next project? If the answer is yes, yes, and yes, visit petraworldwide.org. Petra Worldwide has been strengthening ministries to transform humanity since 2007. Visit petraworldwide.org or call 855-481-9095.
So if the money you spent results in a material benefit or betterment of the property, adapts the structure to a completely new or different use, or restores a major structural component to a brand new state, the IRS mandates capitalization. Understanding this threshold is the difference between an immediate tax deduction and a multi-decade depreciation schedule. So imagine you own a rental residential property and the roof begins to leak. You hire a contractor to patch the leak, replace a few hundred broken shingles, and reseal the valleys. This is a classic repair. The structure is simply being maintained in its normal operating condition. You can write off 100% of the bill on the year in which it happened. But what happens when you decide to tear off the entire roof to the deck and install brand new architectural shingles with a 30-year warranty? Because you replaced the entire major mechanical component, the IRS calls this a restoration. Even though you spent the cash today, you cannot take the deduction today. It must be capitalized or depreciated over 27 and a half years. I'm Nathan Weaver. Remember to lead with confidence, live with integrity, and build something that lasts. We'll see you next time.
Listen every day at 4 p.m. for Kingdom's Wealth and Wisdom, brought to you by Petra Worldwide, strengthening ministries to transform humanity. On the web at petraworldwide.org.